Welcome to Option Trades Today. I'm Tony the Bat Batista, and we are in the Bat Cave in downtown Chicago. It is June 20th, 2024. Some might think it's Groundhog Day. Why? Well, let's take a look at what the market's doing. Even the S&Ps are up once again, $8.50. NASDAQ is up once again, $8.25. You can see the NASDAQ having that run to the upside over the last couple of weeks. The Russell's up $5 and change, and the Dow is up 60. Volatility, sneaky, up 10 cents. I don't put a lot of weight into it until the volatility really has a decent sized move of 2, 3, 4% when the market is kind of not going much lower. For this small move here, 7-10 cents, I got to discount it. Bonds down 30, oil up 75 cents, and gold having a big move to the upside with silver. Gold up $28 and change, and silver up $1.18. You can see there that's a big 4% move in silver, but I'm not going to trade silver. I'm not going to trade gold. What I'm going to take a look at today is, well, take a look. So we're going to go to our watch list, as we always do. But today I'm going to do something a little bit different because we have a lot of earnings that are coming in July and in August. So I'm setting it up by just having my high option volume list and then eliminating all of my stocks with earnings. I'm going to slowly scroll down, well, maybe a little bit faster for some, and I'm going to go past the July expiration. So how do we find out when July expiration is? Well, you can put in any stock that you want. I'll put in SPY and go to the trade page, and you'll see that July expiration is July 19th. So what am I looking at here? I'm looking for the earnings that are after July 19th, because I want to try to avoid earnings. And a stock that pops up to me, one that has a decent IV rank of just about 28. It has earnings after July expiration, and the IV rank has been expanding by about 2% in change, is Google. Now, one other thing I'm looking at Google, what's it been doing as of late? Has it been participating in the overall market? And yes, you could see it's on its highs, but it hasn't been making new highs, going sideways. This bottom line here is the implied volatility IV rank, how it's been behaving, and you can see it is definitely on the higher end of the range with Google doing nothing. So I said to myself, well, I want to avoid earnings. A lot of stocks that I trade have earnings coming in July and in August, but we still only have 29 days till expiration. We like to open trades closest to 45 days in the monthly options. So that would leave me the July options with 29 days and the August options with 57 days. Closest to 45 days would really put us into August because all things being equal, we'll be looking to get out of this trade in about 7 or 8 days when there's 21 days to expiration. So what did I decide to do to kind of skew this a little bit? Because I'm kind of going against the mechanics here and staying in July and not going into August. So I wanted to put, as you know, some money to work. So I wanted to go around the 15 delta options for a strangle. So I'm going to go to the 165, 190. Okay, now I have this strangle. I'm using $2,400 and change in a margin account. You'd be using $4,000 or $5,000 in an IRA account at Tasty Trade if you're using, if you're just doing it with a naked call option and a naked put. So I decided, since I am inside my parameters of when I want to open a trade, I'm going to define my risk because it doesn't cost that much. As you can see here, going $15 wide, it costs me about 14 or 15 cents. And if I go $15 wide, it costs me 11 or 12 cents. And I did get filled on this iron condor at $1.39, but it's really, to me, a simulated strangle. So how will I adjust this if it goes against me? First, let's just take a look on a chart. When was the last time we were above 190, 191? And when was the last time we were below 164, 163 and change, which is our break evens? Just at a standard deviation to the downside and over a standard deviation to the upside. Let's take a quick look at that chart. Well, you'll notice 165 and change or so is something we haven't seen since early in May when we made this move higher. And 195 and change, well, that would be a 190 and change. That would be a new high for Google. So for me, in this trade, I'm taking a look at it as, you know what? I'm going to stick in this trade till I make, well, which I like to usually make is around $1, but I'm going to cut it in half. When I make 50% of the credit received, which is $1.39, then I'll get out of this trade depending on what time it is. By time, I mean how many days are left to expiration. Also, how will I adjust this trade? Since it is a simulated strangle in my eyes, even though it is an iron condor on all four sides, if we go lower, I will look to move the call strike, just the naked option lower, to mirror the move that the stock has had. So for argument's sakes, if Google goes down $5 in the next couple of days, I will move this down $5, just this short strike. If Google were to go higher by $5, I will move this put up by $5. Yes, I'm using more buying power. Yes, I'm changing the probability of success. Let's take a look at what the opening trade is. It's around a 74% probability of success. My delta is long 1 by 1.44. My theta decay is actually large at $6 for a small $1.39 is where I got filled on this trade. And my max profit is obviously the amount of credit I make. But really, what am I looking to make? About $70. Hopefully, what's my time frame? Well, a short time frame would be about a week to 10 days. A longer time frame might be 2 weeks. What could I also do if this spread doesn't come in or volatility expands or the stock doesn't cooperate? I could take all four legs from July into August, and obviously I'd be able to do that for a credit because I would do it when the stock is inside my two short strikes, somewhere around 165 and somewhere around 190. I might actually even be able to move the strikes up or down 1 or 2 when I take it from July to August. So even though we are limited here by the amount of time we have till expiration, for me, it looks like a trade that'll be pretty versatile and we'll be able to manage this trade in an intelligent way. How do you take a look at what I'm doing? Well, you go to the follow page and you'll notice here under Bob the Trader, I do have my picture there. I could not get my name there for reasons are unbeknownst to me, but I am Bob the Trader. And you'll take a look at it right here. I closed, I'm rolling actually an NVIDIA trade that I've had on for quite some time. I'm down about 30 cents or so on that trade. And in coin, I closed the trade from 6:13 early this morning. At 6:17 early this morning from a trade that I put on June 13th. Here's my Google trade from today that I put on. I put it on when the stock was 176 and change. It's moved about 30 cents lower right now, even with the market going a little bit higher. I collected $1.39, simulated strangle, as I just kind of explained to you, using less buying power, buying the wings, and I put a little note there. There's a little shorter duration here, so I'll take a little bit of a grain of salt when I'm looking to manage this trade. Maybe I'll let it work a little bit more than I would normally before I move down or up one of the strikes. All right. Thank you so much for giving me all the support. I do see all of your questions on YouTube. I do my best to answer them in a timely fashion, and you should do your best to move your account to Tasty Trade. Take advantage of some of the money that they're giving out for you, just moving, transferring, or even opening a brand new account at Tasty Trade. Come to the #1 brokerage firm in the galaxy and help us keep the lights on here.